Prior to China's 2019 annual political meetings, the two sessions, President Xi Jinping stressed the importance of preventing and diffusing major risks in China. What are specific examples of these risks, which have been addressed at the two sessions?
金融风险实际上永远都会存在，只要有金融业就会有金融风险，因为它本身是个中介机构，它本来就是一手托两家。
China's new foreign investment law is designed to deal directly with economic and external risks. What's the difference between the new law and the three outdated investment laws?
外商投资法和以前的外资三法有很多区别，他们在立法的理念上，立法的思路上，这个都有很多的变化。
So the Chinese are very aware of the importance, and so they want to make the investment environment desirable. And I think that's what they're trying to do with this law.
How to understand the new foreign investment law, especially for preventing and diffusing major risks. This week, follow China's focus on controlling risks to be closer to China. To assess the 2019 two sessions political meetings, the National People's Congress and the Chinese People's Political Consultative Conference, which just concluded here in Beijing, I start with the framework set by President Xi Jinping several weeks prior, when he gathered senior officials and told them that China faced multiple extraordinary risks: political risks, ideological risks, economic risks, science and technology risks, social risks, external risks, and party building risks. This is why my focus at this year's two sessions has been on risks. I view each element or proposal or press conference or announcement through the conceptual prism of preventing and controlling risks. What are specific examples of these risks, which have been addressed at the two sessions? What policies have been proposed to prevent or diffuse these risks? In particular, China's new foreign investment law, said to be necessary to replace the three outdated investment laws, deals directly with economic and external risks. What are its objectives and provisions? Why is China extolling its significance? Why are some Western businesses questioning its efficacy? To understand the new foreign investment law, especially in the context of controlling risk, is to be closer to China. At the opening ceremony of a study session at the CPC Central Party School in Beijing in January 2019, President Xi Jinping told senior provincial and ministerial officials to strengthen their ability in preventing and diffusing major risks: politics, ideology, economy, science and technology, society, external environment, and party building. Dealing with major economic risks, particularly financial risks, in order to ensure sustained and healthy economic development and social stability, tops the Chinese government's agenda this year.
我们的改革开放，金融领域的改革开放，已不断迈出新的步伐，取得了很大的成绩。特别是去年以来，大家都知道，习总书记在这个博鳌亚洲论坛上呢，再次提到，要加快金融业的对外开放，要对外开放呢要宜早不宜迟，宜快不宜慢。
To understand the financial difficulties China is facing, I interviewed Shang Fulin, the longtime former chairman of China Securities Regulatory Commission and former chairman of China Banking Regulatory Commission. According to the U.S. magazine Worth, from 2012 to 2016, Chairman Shang was one of the 100 most powerful people in global finance. Several weeks prior to this year's Liaohui two sessions political meetings, President Xi Jinping gave a speech to several hundred officials in which he talked about preventing and diffusing major risks. and thereby put the focus on risks, diverse risks, economic risks, political risks, ideological risks, social risks, science and technology risks, external risks, etc. He put risks on the front burner. So this year's two sessions political meetings had many policies that dealt with these risks. From your perspective, particularly of economic risks in the financial sector, what are the current risks that President Xi talks about, and how did some of the policies at the two sessions this year address them?
Guarding against financial risks was one of the three tough battles we faced in 2018. Up until today, we've done a lot of work to prevent financial risks. To keep the bottom line or guard against systemic financial risks is the priority. From the central government down to the local governments, we need to be ready for any rainy days. If those risks happen, the economy could take a major hit. So we have to take measures to diffuse those risks before they actually happen. That's why proactive measures are taken, to be ready to respond accordingly. I believe these risks can be managed within acceptable limits as long as we continue to improve certain mechanisms as well as deepen our understanding of the risks. Financial risks will always be there. As long as there is a finance industry, there will be risk. As an intermediary institution, the financial sector links two sides. Risks get triggered when one side defaults. The significance of the existence of the financial sector is to disperse risk and to contain it within controllable levels.
President Xi Jinping talks about, and banks are under pressure for non-performing loans, and they're involved in supply-side structural reform and deleveraging on the one hand. Now, on the other hand, the banks are being told they have to increase their lending to more risky companies. Sounds like a little bit of a contradiction, no?
Yeah, to some extent, you can always say there's always a risk, when you open up something. But I think if you continue to be very cautious, they also run a risk of, stifling, all of the investments. And China cannot stand that, especially, if the trade environment, internationally, just stimulating the local consumer business. And this kind of sector has to be fostered. You have to take a risk. But that risk, I think, is very manageable because, already they have, the loan structures, bond structures that probably can help alleviate, the pressure that's on the bank. And hopefully, we have a bigger picture to diversify the risks.
So from your perspective, having followed the Chinese economy in your various important incarnations over the years, from the U.S. government to the U.S. Chamber and your own personal business, how do you assess the fact that now, at this time, there's so much emphasis on risk, whereas in the past that was not as hot an item?
Frankly, I think the biggest risk that I see is the softening economy. But another risk, which has to do with the economy, is what we read about in that World Bank report that was done a number of years ago in the middle income trap. And China does not want to fall into the middle income trap. It has been very successful in growing its economy and bringing hundreds of millions of people out of poverty. But the model in so many countries, as when after you have cheap labor, you bring in technology, you export. Well, that model is no longer working for China. And in this transition to a domestic, demand-based economy, based more on services, there is a risk that they may not be able to get the growth that they need to employ people and to keep the economic growth going.
To prevent and diffuse economic risks, multiple measures are introduced. Reducing tax burdens, social insurance contributions, and business-related charges totaling over 2 trillion RMB. On March 15th, in the annual press conference after the conclusion of the 2019 National People's Congress, Premier Li Keqiang stated that the value-added tax will be reduced on April 1st and the social insurance premium rate will be lowered on May 1st. The government called for providing financial support for small and mid-sized companies, continuing to pursue supply-side structural reform to deleverage and improve productivity, and enhancing monitoring, early warnings, mitigation, and control of financial risks. China's new foreign investment law deals directly with economic and external risks while replacing 3 outdated investment laws on joint ventures and foreign capital. In the 40 years of China's reform and opening up policy, foreign capital has played a critical role in building China's economy. Tell us about it and why is it necessary?
What you said is correct because our country's reform and opening up and legal system construction have been reinforcing each other. This crucial hands-on experience has been gained from great achievements over the past 40 years of China's reform and opening up, and this also applies to foreign investment. In 1979, the National People's Congress passed 7 laws at once. Among the 7 laws, the law on foreign equity joint ventures stipulated that foreign corporations, enterprises, or individuals were now permitted to establish equity joint ventures with Chinese corporations, enterprises, or individuals. This was the first law on foreign investment in our country. In 1986, China adopted the Wholly Foreign-Owned Enterprises Law, and in 1988, the Chinese Foreign Contractual Joint Venture Law was enacted. These 3 main laws encompass corporate organization law as well as management law. They also stipulate many laws on foreign-related contracts, so they have multiple attributes.
To attract foreign capital, different regions may adopt a variety of different preferential policies. Though they may seem very attractive, there might be problems during implementation if there is no legal protection. Foreign investors may see some short-term benefits, but without legal protection, long-term interests may be uncertain.
China is saying that this new foreign investment law is a substantial change. The overarching socialist system as it's defined here, that's not going to change. And that's not part of the foreign investment law. So you have to ask that given that environment, you know, what, and at the same time China is saying the foreign investment law is really important, we're really making this effort, you have to try to find how that works with it, given the system as it is.
Sure you do. And companies have been very successful working within the Chinese, foreign companies, working with within the Chinese system for years. And I think where the Chinese seem to be right now, fully understanding the positive effect of foreign investment. I'm not sure if you saw a report put out by a professor from Hong Kong University who made that study. 1/3 of GDP, basically, was a result of foreign investment and the trickle-down and so forth. So the Chinese are very aware of the importance, and so they want to make the investment environment desirable. And I think that's what they're trying to do with this law.
The new foreign investment law intends to give foreign businesses broader market access, protect their intellectual property, prohibit forced technology transfer, and guarantee a level playing field for foreign and domestic companies. The new law stresses national treatment, which means equal treatment for foreign and domestic companies, plus a negative list, which means that any business sector not on the list is permissible for entry, thus facilitating foreign investment as part of China's continuing economic reforms and opening up. Consisting of 41 articles in 6 sections and stressing investment promotion, protection, management, and legal responsibility, the foreign investment law's primary objectives are to improve the openness, transparency, and predictability of the investment environment for foreign investors. The new foreign investment law concentrates on investment promotion, protection, and management, but the previous 3 laws focused more on management. Is there any significance in this change?
This law has a total of 6 chapters. The general provisions are followed by investment facilitation, protection, and management. Here it does reflect the adjustment of some legislative ideas, but also covers some policy information. The role of management is gradually getting diluted, which is actually a kind of law to promote and protect investment.
The core of this law considers the pre-entry national treatment plus a negatives list, which is equal competition with Chinese companies. In the past, many foreign-funded enterprises enjoyed a kind of supranational treatment, but there were also irregularities in management.
Pre-entry national treatment plus the negative list represents the basic content of the new law, which marks a fundamental shift from the long-term management model that we used to apply. This transformation is the inevitable result of the deepening of China's reforms in related areas until today. In 2001, China was admitted to the WTO. Also in 2001, before and after we entered the WTO, we carried out a large-scale overhaul of the laws and regulations in force in our country, including the revision of the 3 laws governing foreign capital. For example, in the past, the laws used to stipulate that foreign-funded enterprises must make procurement in China a first choice and achieve balance of foreign exchange receipts and expenditures. In 2013, the 3rd plenary session of the 18th CPC Central Committee made a decision to try out the pre-entry national treatment plus negative list system in the Shanghai Free Trade Zone.
Frankly speaking, up to today, after 6 years of the formation of Shanghai Special Economic Zones, I think 2 things are brand new in that area. The first one, we adopted for the first time a legal norm, what we call pre-national treatment, meaning before a foreign investment is setting up its new agency or whatever in the material setting, then the government of China adopted the international practice to provide with those potential investors a kind of pre-national treatment, meaning you can enjoy the very common practices as local. This is the first. And the second, whenever we have foreign investment, we have a guidance, a guidebook by the central government. Quite long, very long, I will say, in total 1,049 items for the promotion, for the restriction, and for forbids. Okay? Shanghai Special Economic Zone says we need to have something new. It's also kind of international practice we need to adopt for the first time. It is called very special measures for foreign investment enterprises. The term is quite long, so that's why we shortened it and we use the nickname negative list. So pre-national treatment and negative list, they are going along very well altogether.
In the past, due to a lack of comprehensive legislation, there may have been a lack of sufficient policy transparency, predictability, and stability. By rolling out the foreign investment law, we aim to improve these aspects. In fact, the greatest demands of foreign investors are policy stability, transparency, and predictability.
Okay, let's look at each of those pieces. On national treatment, which you said is a real positive. Why is that necessary, and how would that literally be effective in a practical sense, and what are the elements of regulations to support that that would give you confidence that you get it?
Well, it's all in the enforcement. National treatment we've talked about ever since China came into the WTO. And from time to time, and I'd say very frequently, that foreign companies do not receive as fair treatment, or do not receive fair treatment vis-a-vis Chinese companies, so that whether it's a decision to give priority to a Chinese company or certification or other areas of business, what has happened in the past, it has been the case that foreign companies haven't been treated fairly. So if they will be, that will be a step forward.
At present, China is relaxing restrictions on access to foreign-funded financial institutions. In the short-term business of high-end private money management and tailored international financial services and other high-end financial services like this, we may see more intense rivalry where we lag behind. But the upside to that is domestic financial institutions will have more opportunities to gain access to new technology, experience, knowledge, and management skills from their counterparts.
Yet, there is concern among foreign media and business leaders about the lack of specificity in the foreign investment law, and thus about how it will be implemented and enforced. 1/3 of the law's 41 articles are a single sentence, allowing for uncertain interpretation. Chinese experts say that specific regulations will be forthcoming. The foreign investment law benefits China as well as foreigners, in that international capital and companies will augment competition and energize high-quality economic growth in the new era. In addition to foreign investment law, China needs to improve its legal system for foreign investment. What are the plans, short-term, mid-term, long-term?
I think that a very important aspect of the foreign investment law is to respond to the views and suggestions of the international community on China's opening up policy and issues in China's economic development. Many targeted regulations have been made, such as strengthening intellectual property protection. China has always valued the protection of intellectual property rights, and the legal system for intellectual property protection is gradually improving. We have special laws on this in place, such as patent law, trademark law, copyright law, criminal law, general provisions of civil law, e-commerce law, anti-unfair competition law, etc. Combined with supporting regulations of the State Council and other departments, this constitutes a relatively comprehensive legal system on intellectual property protection. Moreover, the draft foreign investment law strengthens protection of intellectual property rights and has made some other regulations, such as the ban on technology transfer by governments at all levels and their staff.
As I said, we have a very big leap forward, meaning the protection of IP is a must. This is, I couldn't say it's 100% is the consensus. It's the majority consensus at all. We cannot go back because we all understand the much more protection of IP, the much better ideas in the world, in China, for people of creation.
And in some sense, when everybody's making money, everybody's, putting in, chipping in the economy, what may not be a good picture can become a very pleasant picture for everybody to see. So I think, the China miracle, in some sense, it could be another facet that you can see, and of course, it cannot go against conventional wisdom, but sometimes it does surprise people.
Personally, I'm optimistic about China's financial openness and hope that foreign financial institutions can fully grasp the strategic opportunities in growth and long-term development that are available in China's huge marketplace. If they can, it will be a win-win for everyone.
Some people say that the law will still enable local governments to interpret it very differently in one region or another. And is that good for foreign companies, and that local governments will compete in tracking, using this document as a mechanism to compete with each other? And as some people say, a race to the bottom. But in that case, it would be beneficial to foreign companies.
Well, it could be beneficial to foreign companies who understand how to work in China. Let's put it that way, who have been successful developing relationships and making sure that whatever investment they make is not only good for the company itself, but is good for where they're investing. So that does make for some flexibility, but so many, not only American, but Western companies are much more used to, okay, these are the rules and we're going to follow the rules. And so they're less adept at working in an environment like that. And so they may be less willing to invest in that case.
At the 2019 two sessions, I picked 3 commitments that, for me, stand out in preventing and diffusing risks. 1, pursue an employment-first policy. 2, control pollution with a much increased budget and by setting specific, ambitious pollution reduction targets. 3, bring over 10 million of the rural poor out of extreme poverty on the way to eliminating all extreme poverty by 2020. Exemplifying control of risk, China's new foreign investment law, languishing for years since 2015, was suddenly fast-tracked. Though specifics are yet to come, the law intends to give foreign businesses broader market access, protect their intellectual property, prohibit forced technology transfer, and guarantee equal treatment, a level playing field for foreign and domestic companies. Foreign critics, quick to stress the law's lack of specificity, should appreciate China's commitment and process. China has become the champion of globalization, propounding the benefits of free trade. And by proposing to open up its own markets further and faster, China seeks to align its domestic policy with its international strategy. The foreign investment law intends to facilitate foreign companies doing business in China, providing fair and equal market participation, while at the same time enhancing market competition to benefit Chinese consumers. President Xi is determined that China must continue to champion globalization, which is why China's foreign investment law must be effective, and why, after NPC legislators approve the draft and make it a binding legislation, foreign businesses must appreciate its change-making powers. Much is riding on the foreign investment law. President Xi takes risks very seriously. So must we. That's the message of the 2019 two sessions. That's closer to China.